Welcome to Accounting for SS1 at LightTech Academy. Today we study accounting concepts and conventions. What are accounting concepts and conventions? Accounting concepts, also called accounting principles or fundamental assumptions, are the basic rules, assumptions, and guidelines that govern how financial transactions are recorded and financial statements are prepared. They ensure that accounts are consistent, comparable, and reliable. The fundamental accounting concept. 1. Business entity concept. Entity concept. The business is treated as a separate legal entity from its owners. The owner's personal finances must be kept separate from the business finances. Example, if Ode owns a shop and uses 50,000 Nigerian nairas of the business money to pay his personal rent, this is a drawing, it reduces the owner's capital, not a business expense. 2. Going concern concept. The business is assumed to continue operating indefinitely, it is not going to close down in the near future. Implication: assets are valued at historical cost, what was paid for them, not at their breakup value, what they would fetch if the business was sold tomorrow. 3. Accruals concept, matching concept. Revenues and expenses must be matched to the period in which they are earned or incurred, not when cash is received or paid. Example, if a business pays rent for January to March in December of the previous year, the December payment is a prepayment asset. Only the portion relating to the current year is charged as an expense. 4. Consistency concept. Once an accounting method is chosen, e.g. the straight line method of depreciation, it must be applied consistently from year to year. Changing methods every year would make it impossible to compare results over time. Note, if a change is made, it must be disclosed in the accounts. 5. Prudence concept, conservatism. Accountants must be cautious, do not anticipate profits but do anticipate losses. This means, only recognize revenue when it is certain. Recognize expenses and losses as soon as they are foreseeable. Example, if a debtor is unlikely to pay, create a provision for bad debts immediately, do not wait until the debt is actually lost. 6. Materiality concept. Only information that is significant, material, enough to affect a user's decision needs to be separately disclosed. Very small items may be treated differently from their strict accounting treatment if it makes no material difference. Example, a stapler costing 3,000 Nigerian nairas is written off as an expense immediately rather than being capitalized as a fixed asset, it is immaterial. 7. Historical cost concept. Assets are recorded at their original cost, the price paid to acquire them, not at their current market value. Advantage: objective and verifiable. Disadvantage: may not reflect current values during inflation. 8. Monetary measurement concept. Accounting only records transactions that can be expressed in money terms, in Nigeria, naira, Nigerian naira. Non-monetary information, e.g. the quality of management, staff morale, is not recorded in the accounts. 9. Dual aspect concept, double entry principle. Every transaction has two aspects, a debit, receiving, side and a credit, giving, side. This is the foundation of double entry bookkeeping. The accounting equation, assets equals liabilities plus capital. 10. Realization concept. Revenue, income, is recognized only when it has been earned, when goods are delivered or a service is performed, not when cash is received. Accounting conventions. Conventions are less rigid than concepts, they are customs or practices that have developed over time. 1. Full disclosure, all relevant information must be disclosed in the accounts, nothing material may be hidden. 2. Substance over form, transactions are recorded according to their economic substance, reality, rather than their legal form. 3. Objectivity, accounts must be based on factual, verifiable information, not personal opinion. Remember, accounting concept equals basic rules plus assumptions plus guidelines governing how transactions are recorded and financial statements prepared equals ensure consistency plus comparability plus reliability. Business entity concept equals business is separate legal entity from owner equals owner's personal finances kept separate from business, owner using business money equals drawing equals reduces capital. Going concern concept equals business assumed to continue operating indefinitely equals assets valued at historical cost not breakup value. ACCIULS/matching concept equals revenues plus expenses matched to period earned or incurred equals not when cash received or paid equals December prepayment equals asset. Consistency concept equals accounting method applied consistently year to year equals if change made equals must be disclosed. Prudence/conservatism equals do not anticipate profits but do anticipate losses equals only recognize revenue when certain equals recognize expenses plus losses as soon as foreseeable equals create provision for bad debts immediately. Materiality equals only significant information separately disclosed equals very small items treated differently if no material difference equals Nigerian Naira 3000 stapler written off as expense equals immaterial. Historical cost equals assets recorded at original cost equals objective plus verifiable equals may not reflect current values during inflation. Monetary measurement equals only records transactions expressed in money terms /Naira Nigerian Naira equals non-monetary info like management quality not recorded. Dual aspect /double entry equals every transaction has two aspects equals debit /receiving side plus credit /giving side equals assets equals liabilities plus capital. Realization equals revenue recognized only when earned equals goods delivered or service performed equals not when cash received. Accounting conventions, full disclosure equals all relevant info must be disclosed, substance over form equals economic substance /reality over legal form, objectivity equals factual plus verifiable information. Thank you and keep excelling at LightTech Academy, powered by LightTech Solutions Limited.